in sustainable and inclusive growth. And I think in most of the sessions that we've had prior to this, the role of banks has been alluded to. But I think what we will try to do today is go a little bit deeper into the role of banks. And we have a very eminent panel with us, and I'm sure they will be equal to the task of being able to get a bit deeper into the topic. I'll introduce them briefly, and on my immediate left is Anthony Mopai Maroping, who is the Commissioner of Economic Affairs for the Africa Union Commission. He's also served as a Vice Chancellor of International University of Lesotho, and has also previously served as the Governor of the Central Bank of Lesotho. Next to him is Ebenezer Esoka, who is the Vice Chairman of Standard Chartered Bank based in South Africa. And next to him is Mr. Bubka Jai, who is the Director General of the group Attajari Wafa Bank, which is the largest bank in Morocco and the 6th largest bank in Africa. And on my extreme left, last but certainly not least, is Fernando Costa Lima, who is a member of the board of BPI, which is a Portuguese bank, a listed bank in Portugal, and has a majority stake as well in the 2nd largest Angolan bank, which is BFA, and also has a 30% stake in the 2nd largest Mozambican bank, BCI. And through that role, he's also able to give us a unique perspective, both from the European perspective as well as his interest in African banking, to be able to contribute to this topic. The first question that I will ask to all the panelists, and I'll start from my left going right, is what do you think the role should be for banks and financial institutions in propelling Africa to achieve some of its strategic objectives, such as private sector development and growth, improving the investment and business climate, supporting the regulatory framework and private-public dialogue, and contributing towards private investments in infrastructure, water, energy, and transport, expanding local investment opportunity, and really harnessing the huge potential in the continent of Africa. Would you say that commercial banks have done their bit in actually harnessing the opportunity of Africa? And I'll start with you, Mr. Commissioner Maroping.
First of all, thank you very much, and thank you for the opportunity. First of all, in Africa, we are really looking for or aspiring for accelerated, stable, sustained, and inclusive growth, which we hope will lead to sound or rapid, resilient, and inclusive as well as sustainable development. So we are more after development. Just to say, there is a very recent publication called The Fastest Billion, which was released in New York last September. But also annually there is the World Economic Forum Competitiveness Report, as well as the World Bank Ease of Doing Business report. It's annual also. And it shows that investment climate or ease of doing business in Africa has been improving, is continuing to improve. And that's because of the developmental state, as well as good or central banks performing their functions very well. All of them combined create the necessary climate. Regarding public-private dialogue, the African Union Commission itself annually, with its partners, organize a forum for public-private dialogue exactly for that purpose of merging views and exchanging views between the public and the private sector. In terms of the infrastructure, the banks themselves really have to be innovative, but the private-public partnerships do work. I know instances where they have worked very well. Some are a bit shy about it, maybe because it's not a concept that has been applied for a long time, but it works, and I know it has worked very successfully, as well as the consortium approach to minimize risk, because some of these infrastructure projects are very profitable in the long, medium to long run. I just want to conclude by saying while maybe the European capital may be a little bit averse to go to Africa, but capital from elsewhere, from Asia, particularly India and China, but also increasingly from South America, they find the climate very, very good, very conducive already. And you see the curve of their investment in Africa going up because the rates of return are very high. Thank you very much.
Mr. Isoka?
Thank you. I'll close to my comments around four key pillars. The first pillar would be to really take advantage of the transformation dynamics of technology in the continent. And on these, I would like to touch on mobile financial services that are extremely important, that will really change and redefine the way financial inclusion takes place in the continent. The continent already is a leader in this space. Number two, regulations. On regulations, I think it's a question of the trade-offs between financial stability and financial access. And I know central banks and governments across African countries are struggling with a balance on this. The question is, they are mutually enforceable. And as we roll out Basel II, Basel III in some African countries, we need to take this into consideration. If you take South Africa, for instance, it's way advanced with the Basel III value propositions. South Africa is where you would not have the US as far as Basel III goes. January 1, 2013, we're fully compliant as far as capital requirements go under Basel III. But their model is slightly different. The financial sector policy model of South Africa is anchored around four priorities. Number one, financial stability. Number two, consumer protection and market contracts. Number three, financial inclusion. And finally, financial integrity. The third pillar, it's a coalition which at times may be referred to as being unorthodox. This coalition is between policymakers across this space, in Africa and in Europe, obviously, financial services operators, banks, etc., development actors. From development actors, I'm talking of private sectors, public sectors, operators. I'm talking about multilateral institutions, regional and international, such as the IFC, AFDB, South Africa Development Bank, etc., Southern Africa Development Bank, bilateral institutions such as the FMOs, etc. They need to play a very important role. That's the third pillar. And finally, I think the fourth and most important pillar in the interest of time is to ensure that banks themselves are viable. So viability of financial institutions, and beyond viability, for financial institutions to be able to authoritatively talk of the impact they have in the markets, we need a process where independent studies can be conducted to talk a bit about the dynamics. I'll give you an example. For Standard Chartered, we had it was the first ever report on the impact of financial institution in the continent of Africa. The results, quite exciting. You know, from those reports, we were able to demonstrate that Standard Chartered directly or indirectly supports 1.9 million jobs in the continent. That's equivalent to approximately 0.6% of the total workforce in Africa. Number two, we're able to demonstrate from an independent study that Standard Chartered Bank contributes over $10.7 billion to Sub-Saharan African economies' GDPs. It's a total of 1.2% of the region's GDP. Thirdly, we were able to finance trade to the tune of 7.2 billion CFA, 1.2 billion of the region's entire trade package. And fourthly, the report also demonstrates that we have been able to support 1.8 billion of tax payments to governments in Sub-Saharan Africa. This is equivalent to 1.1% of the total tax payments in the continent. That is extremely important. Without a viable financial institution, you can talk of the institution having sufficient authority to meet with regulators and stakeholders across the space to make any contribution to the dynamics.
Thank you very much. Mr. Jai, maybe you would give us the North African perspective on the same.
Je voudrais d'abord vous remercier de l'opportunité que vous me donnez de parler de la contribution du secteur bancaire à une croissance durable et inclusive. Donc, ma réponse, je dirais que la promotion du secteur privé et du climat des affaires s'effectue à travers l'accompagnement de l'ensemble des opérateurs économiques, sans exclusion aucune, quelle que soit leur taille, quels que soient les besoins dont ils font référence, que ce soit pour le financement des projets, que ce soit pour le fonctionnement d'une manière générale. Donc, notre expérience dans le continent, c'est que chaque fois que nous nous sommes installés dans un pays, nous nous sommes considérés comme une banque du pays d'abord. Je pense que c'est très important de ne pas adresser des niches spécifiques quand on veut faire de la banque et quand on veut que cette banque s'inscrive dans le développement économique et inclusif du pays. Et donc, il faut accompagner aussi bien donc les PME, les très petites entreprises, la grande entreprise, les clients particuliers, mais les clients riches, les clients moins riches, avec donc une démarche donc de proximité extrêmement importante. C'est ce que nous faisons d'ailleurs dans l'ensemble des pays, avec donc des projets d'extension des réseaux d'agences bancaires extrêmement ambitieux, avec des recrutements massifs donc d'employés pour servir donc la clientèle qui s'adresse aux banques, avec une formation spécifique, avec des systèmes d'organisation, des systèmes d'information très évolués. Je pense que c'est quelque chose d'extrêmement important qu'on a tendance généralement à décaler dans le temps et à prévoir une fois que la rentabilité est là. Je pense que c'est l'inverse qu'il faut faire. Il faut d'abord investir, il faut d'abord faire confiance aux jeunes et aux forces qui existent et qui sont réelles en Afrique. Et c'est de cette manière-là qu'on peut effectivement être efficace dans l'accompagnement. La banque, donc c'est la banque de détail. En gros, c'est un outil qui est très efficace parce qu'il est proche donc des préoccupations des gens, parce qu'il vit avec les différents agents économiques et donc il peut plus facilement répondre à leurs besoins et être efficace. Mais ce n'est pas suffisant parce que les risques sont là. On en a parlé à plusieurs reprises dans les panels et dans les tables rondes. Il faut le rôle aussi, et en tenir compte, le rôle des institutions internationales et qui aujourd'hui offrent un certain nombre de possibilités spécifiques qui permettent donc d'atténuer les risques. Et dans ce cadre, nous avons dans notre groupe noué des partenariats très forts avec Islamic Development Bank, avec l'OPIC, avec SFI, BAD, etc. Et donc ce sont des choses qui sont extrêmement importantes. Vous avez évoqué les infrastructures et vous avez raison donc de les citer parce qu'il y a un manque extrêmement important et les banques doivent apporter une solution dans ce domaine. Donc nous avons dans notre groupe une expérience assez significative dans l'accompagnement des grands projets structurants au Maroc dans différents domaines et ceci depuis une quinzaine d'années, que ce soit dans l'édification des ports, dans le développement des réseaux autoroutiers, routiers, dans le développement des centrales de production d'énergie, dans les raffineries, dans les mines. Et donc ceci est extrêmement important parce que pour accompagner ces projets, il faut avoir de l'expérience. Ça ne s'invente pas. Ce sont des choses qui sont, je dirais, quelque part, c'est en forgeant qu'on devient forgeron. Et donc il faut absolument avoir déjà, par le passé, eu un certain nombre de réussites pour pouvoir accompagner et prétendre accompagner des projets qui deviennent de plus en plus complexes sur notre continent. Et donc dans ce cadre, et je m'arrêterai là, il s'agit de mettre en place des schémas adaptés pour que les pricing soient acceptables par les États. Et il faut que les maturités correspondent donc au niveau de rentabilité et de retour sur investissement de ces mêmes projets. Il faut syndiquer donc les projets parce qu'une banque toute seule ne peut pas financer ces projets-là. Et mettre d'accord des banques, ce n'est pas une chose facile, surtout quand il s'agit donc de banques venues d'horizons différents. Et enfin, il faut des partenariats publics-privés, ça a été relaté. Je ne reviendrai pas là-dessus, c'est des choses extrêmement importantes. Je pense qu'on aura l'occasion d'en reparler.
Thank you very much. And Fernando, you have the unique opportunity of looking at it from both perspectives because you operate out of Europe, but you have commercial banking interests in Southern Africa. Give us your perspective.
Well, first of all, thank you very much for being here and having this opportunity to share some of our views on at least these two African countries we are for more than 20 years. And I would say that the major role of a bank in Africa should be the same role as anywhere in the world. It should be a bank. And what do I mean by this? By making a proper credit risk assessment, because our major responsibility is to our depositors and to our shareholders. If we do that, we can fulfill our role in helping the economies growing. Having said that, as a major statement, because I think Mr. Ebenezer Essoka said more or less the same in a different words, because we need stable financial systems in every country, and Africa more. Because if we have stable banks, we can have inclusive development. That's my opinion. In what concerns with your question about improving regulatory framework and public-private dialogue, we very much support the efforts that basically central banks in Angola and Mozambique have done to create a proper regulatory framework for banks to work, because we believe that if we have strong local banks, we can have the proper financial surface, let's say so, to finance the companies, to finance the households, and so on. What concerns infrastructure, well, it's quite, if you allow me, a tricky theme, because normally we are talking about huge amounts in investment that normally the local banks cannot afford, if I may say so. Many times you have to go to the international markets for funding and financing these big infrastructure projects. And probably what's happening is that in Africa, in general, there should be more involvement of the multilateral agencies in credit enhancement. Because normally the problem with financing these projects has to be with commercial risk and political risk. And probably there is not enough insurance for political risk, and I think that should be something that the multilateral agencies should address. About foreign direct investment, we are trying to attract foreign investment for Angola and Mozambique. 5 years ago, we have just set up 2 special units to attract good foreign investment. And I would say that if you know the country, in a previous panel here, someone said that real risk in Africa is lower than perceived risk. And that's true. For instance, Angola is, in doing business, one of the worst places. But you can do business in Angola if you go there, if you know, because the government is committed to support foreign investment and local entrepreneurs. In spite of this position of Angola in doing business ranking, there has been a lot of Portuguese companies that have invested a lot in Angola and Mozambique also. And I think that could be my
Thank you very much. Let's now move to the elephant in the room. In the interest of time, I think I'd like to request that the panelists shorten their responses a little bit, because we have a few more questions to go through. The elephant in the room is the whole topic of access and cost of finance. And if we look at the African situation, and especially with special attention to micro, small, and medium enterprises in Africa, and even to large enterprises in Africa, access to finance has been very elusive. And if we look at the lending rates across the whole continent of Africa, the cost of finance is significantly higher than it is in other parts of the world. And the question that I'd like to ask you all is, has this high cost of lending been a hindrance to achieving sustainable development in the continent? And secondly, there's a mismatch between central bank rates and what commercial banks and financial institutions agree to lend at. And there's usually, if you look at the arbitrage models of banks across Africa, the gap between the central bank rate and what the commercial banks are levying to the consumers is a huge difference. And perhaps this is part of the reason for the slowdown. And looking at, having addressed the problem, perhaps what measures, collaborative measures, could be taken between the policymakers and the banks to bring down the cost of lending? And I think I'll start with you, Commissioner Maruping, especially with your central banking experience.
Thank you very much. Well, to start with, yes, it is true, actually, even in that World Economic Forum annual report, access to credit is one of the top 10, always top 10 or even top 5 impediments to investment in Africa. So that is true. And that widespread between the rates, that spread unusually widespread, it is prevalent, and it is true. The banks, of course, they will talk for themselves. They normally cite high risk, which they say is due either to commercial or political risk. But I would also like to point out to lack of competition. Most of the time they are oligopolies, and there isn't enough competition. So I think competition will force or will, how will I say, encourage banks to narrow that spread a little bit. But also on the part of the government, you said, what about on the part of government? On the part of government or authorities is to make sure that institutions are doing their job. The judiciary is expediting cases. In some places, they even have commercial courts. They have experimented with commercial courts to make sure that, retrieving collateral where things have not gone right can be done as quickly as possible. So law enforcement, rule of law, some guarantee schemes could be helpful. But most important, really, it's also for the fiscal policy as well as the central banks on the monetary and exchange rate policies to make sure that there is price and financial stability in the economy. But even basic functions such as payment system, payments, clearing and settlement systems, to make sure that indeed they are convenient, secure, efficient, and regulatory and supervisory function, as well as holding enough foreign assets to ensure the investors, of course, that they can come in and go out. It increases confidence, investor confidence. So in my view, really, and financial and making sure intermediation is healthy and the financial sector has been deepened enough. With that, we should see the collapse a little bit between the central bank base rate and the commercial banks' lending rates.
Okay.
Briefly.
Mr. Soko, if you could give us your perspective from the Standard Banking Group, because you bank across many jurisdictions in Africa, and this issue of access and cost continues to be a nagging problem. What would you say about that?
I think it's a fact. Cost is more expensive relatively compared to other regions. That is a given. Okay, we're not going to back up from that. But the question is why? I think some of the players who happen to suffer the higher cost usually have a problem of financial literacy being inadequate. So there is a solution there. Be well prepared to have negotiations with your banking partners. Those who are better prepared tend to negotiate for lower rates. So that's one thing that's extremely important. Secondly, I think the question of the death of the financial services sectors in general is extremely important. We need more than commercial banks to meet the requirements of the actors across our economic space. You need to diversify a bit. We need venture capital groups. We need capital markets developed. We need leasing companies operating. We need DFIs actually playing the role they should be playing. In the interest of time, I'll limit it to that. And I think also there is a question of the quality of information you're getting from some of our stakeholders we have to deal with, which are the companies that come for facilities. There is a requirement. You have to have international accounting principles that are broadly accepted for people to be able to understand your game and be able to partner with you. But I got news for you. It is not going to become any easier going forward. Africa is embracing Basel III. With Basel III, there is a premium on risk-weighted assets and the capital that banks must hold. This should be made abundantly clear. I think it's a key message and recommendation to the heads of state as they embrace Basel III. Capital will become more expensive, and if it is more expensive, you have to pass it on to those who are borrowing. That is a clear case. Now, a solution for inclusion, as I said earlier, let's try and accelerate regulations that will enable responsive engagement of the mobile financial services solution across the continent. That will enable us not have to play just with bricks and mortar. In other words, the central bank governors, I have an ex-governor next to me, will not insist on me having a license up-country for me to improve my service and value proposition within the urban centers. Because the example we have in Kenya already of M-Pesa tells you what can be done. So that is another solution that we might want to look at. But I think this question is here for good. We need to be realistic about it. As far as Basel III is implemented across the continent, capital will be more expensive as capital adequacy ratios become a core requirement, and you will pay more for loans.
Yeah, thank you for that response. And I'm glad that you sort of directed it in the side of inclusivity, because that's really the theme of our conversation here today. Mr. Jai, let's turn a little bit to infrastructure. Donald Kaberuka, the president of the African Development Bank, and Anne Pogum, the CEO of Agence Française de Développement, estimates that Africa will need up to $50 billion per annum to cover the infrastructure gap in the continent. This is costing the African economies up to 2 percentage points of growth every year. And what are the innovative financing structures that you would propose to policymakers to adopt in raising these $50 billion to avoid saddling the already not very strong African economies with huge debt to bridge the infrastructure gap?
Merci pour cette question fondamentale, car les infrastructures sont au cœur de la croissance durable dont a tant besoin notre continent. Donc pour développer donc, ces infrastructures, l'Afrique se doit de développer ses marchés financiers, avec pour objectif prioritaire d'augmenter et d'accroître la pénétration de ces produits. Lorsqu'on regarde les marchés, en tout cas ceux où nous exerçons, les taux de bancarisation restent très faibles et se situent souvent entre 5 et 10% seulement. Et donc la mobilisation de l'épargne, et en particulier l'épargne longue, qui est vitale d'ailleurs et constitue le carburant des financements longs que requièrent les infrastructures, manque cruellement. Et cette mobilisation de l'épargne suppose des acteurs bancaires et financiers qui doivent être profondément intégrés dans les tissus économiques locaux. Et donc, ils doivent mener des stratégies de bancarisation primaire, c'est-à-dire aller là où il y a effectivement les populations pour récupérer l'épargne pour qu'elle puisse être réintermédiée et redistribuée au niveau des besoins d'infrastructure. Cette démarche a été celle que notre groupe essaie de faire depuis un certain temps. Et à cet égard, le nombre d'agences dans chacun des pays a été doublé, triplé en très peu de temps. Et nous travaillons donc à déployer un modèle original qui a beaucoup réussi au Maroc. C'est le développement du low income banking, parce que la banque aujourd'hui est perçu par les populations de notre continent comme étant un instrument aux mains des riches et non pas pour la population moyenne ou la population de masse qui a un revenu, qui a des moyens et qui peut contribuer elle-même donc à son propre développement et au développement de leur pays. Et donc il y a aujourd'hui de véritables couloirs et je dirais même des autoroutes qui sont complètement vierges et qui n'ont pas été encore explorées pour mobiliser donc cette épargne dont on a tant besoin. Ce développement de la banque permet aussi de capturer et de faciliter donc, et de faire introduire dans le système bancaire des pans entiers de l'économie. Et il y a aussi d'autres instruments qui peuvent être développés, des instruments complémentaires et de collecte de l'épargne, notamment, je pense particulièrement à la banque assurance et à la gestion d'actifs, qui sont des éléments aussi extrêmement importants et qui peuvent contribuer eux-mêmes donc, à ces développements. Il faut signaler aussi un autre élément qui n'est pas suffisamment déployé et développé, même s'il contribue d'une certaine manière donc, à l'économie de nos pays africains, c'est le développement du big rent banking. Aujourd'hui, le modèle qui fonctionne très bien au Maroc nous a permis vraiment de combler les déficits donc, que connaît donc, la balance commerciale du Maroc donc, à travers donc, la fidélisation et je dirais, et l'attraction donc, que nous exerçons vis-à-vis des migrants qui sont en Europe, aux États-Unis et dans d'autres pays et qui permettent, à travers leur transfert et à travers l'épargne qu'ils constituent dans leur pays d'origine, donc d'être un véritable insuffleur d'économie et financeur donc, des projets. Donc tous ces éléments-là font qu'effectivement, le fait de mobiliser cette épargne est déjà un premier déclencheur. Le deuxième déclencheur, c'est les partenariats, bien sûr, publics-privés, et qui permettent de partager l'effort entre, d'un côté, l'État, qui n'a pas tous les moyens et qui n'a pas toutes les capacités, les privés, et un certain nombre d'institutions qui permettent finalement d'arriver à développer les projets. Donc voilà un peu. Bien entendu, tout ça doit être formalisé à travers des schémas de structuration, des schémas donc, de financement qui aujourd'hui sont tout à fait disponibles.
Thank you very much. I'll direct this next question to Fernando. And Portugal, like some economies in the European Union, have gone through serious challenges in their monetary and fiscal policies arising from the financial crisis of 2008. In your opinion, what should African economies do to shield themselves or insulate themselves from similar situations? And what advice would you give to policymakers in Africa and bankers in order to make sure that this sort of situation doesn't occur in our continent?
Well, I think that we should split the crisis in two parts. The first one coming from the subprime crisis that was a financial crisis that just sent shock waves to major countries. But the African countries in general, they were immune to these shock waves because we were talking about those toxic assets and things like that. And African economies were not so globalized in that sense. So I don't think there has been a major problem over there, as we know. It's different what happened with the economy, the world economy, and the shock waves that some African countries have received. Don't forget that we have a sharp decline in oil price in 2009, and that affected some African countries and their neighbor countries. But aside from that, I don't think that African countries have suffered so much on that. And even after 2009, many African countries have come to good growth figures in terms of GDP. And if we talk about Portugal, we have the sovereign debt crisis And if we think that, so there are several Portuguese banks that have major shareholdings in basically Angolan and Mozambican banks, we could think of some problems, but this is very well shielded because the Angolan banks and the Mozambican banks, they have strong own funds, very well funded, so there was also no problem. The advice, I would say that for policymakers, they should be fiscally responsible, and for banks, they must do their job properly. And that would be the best remedy for these problems.
Thank you very much. I would like to turn to you, Mr. Esoka, and suggest that there is a revolution taking place in Africa. And the revolution you'd alluded to earlier is on the basis of mobile financial services. In my home country, Kenya, $22 billion is transferred over mobile platforms annually. And we've seen a recent situation where the largest bank has applied for a telco license and the largest telco has applied for a banking license. So there are tensions around this innovative new banking approach, that also impacts on inclusivity. Is there a possibility for inclusivity, for a more collaborative approach between the telcos and the banking system that will actually ensure that we use this innovative approach to alleviate poverty in Africa?
Well, thank you. I think the fact is that digitization in the banking industry is here for good. That is a given. And is at the heart of the brand promise of Standard Chartered Bank. It's like my bank, we are in Africa for good. Now, can there be a collaborative approach to it? Absolutely. If you look at the developments in Kenya, when M-Pesa was launched, it was in partnership between Safaricom, which is a mobile network operator, the largest one in Kenya, and Vodacom. That partnership has worked extremely well. And if you look at Safaricom's income of the first half of 2014, you would appreciate the dynamics. Voice, the increase in revenue on voice is in the tune of, if I'm not mistaken, about 12%. But if you look at all the value propositions, SMS, data, and mobile financial services, approximately 30%. Now, mobile financial services, between 2011 and 2014, the revenue growth has been in the neighborhood of 142%. Now, with such growth and activity taking place, it is imperative that all financial institutions would like to play a role here. So yes, a response to your question, there will be more collaboration. There will be need for us to work in concert with mobile network operators across the continent to ensure that we use technology to provoke and proactively address the issue of inclusiveness in the financial services sector. So what Kenya has started very well in 2007, I know by 2012, Safaricom had approximately 70 million customers on the platform. I know today, if you look at the average utilization on a 30-day consistent basis, you have approximately 11.6 million users on that platform. We know what is going on. We are engaged with some operators there. And yes, we'll be working in concert with stakeholders from across the space to make a difference in this area. So that will happen. It is not an accident. It is the reality of today. It will continue to take place. The challenge, though, is with the regulations. And that is where stakeholders must work in concert to address viable policy initiatives that would enable us to regulate it and encourage responsible uptake of these facilities. We know with geopolitical developments and the issues we face around the world today, there is a big concern to be able to trace the flow of resources financial resources in particular. As people talk of terrorism and other issues, it is a reality. In Kenya yesterday, we know what happened. The unfortunate Al-Shabaab incident. Now, if a financial institution Standard Chartered opens its doors and doesn't do the due diligence on various customers, the customer due diligence requirements, KYC, etc., we will be unduly exposed. So we're having the right conversations. The conversations are not to stop the momentum. It's to encourage responsible uptake. And we will be working in partnership with various operators across the continent to ensure that the continent doesn't go and follow a progressive phase of development, but it should be truly transformational, and a revolution is what I'm looking at here.
Thank you very much. My final question will be to Commissioner Maruping, and I think this conversation today is about inclusivity. So I'll want, after I ask him, maybe to take one or two questions from the audience to the panel. But Commissioner Maruping, you've been in academia, you've been a central bank governor, and you're now with the African Union Commission on Economic Affairs. And, you know, in Africa, there's very many well-established trading blocs. There's ECOWAS, there's SADC, there's COMESA, there's the East African Community. And the East African Community is an advanced stage of becoming a fully fledged monetary union. What are the barriers of Africa achieving a monetary union like the EU? And I think to quote Mo Ibrahim, and what would the benefits be? And to quote Mo Ibrahim yesterday, he says, he drew a comparison between China and Africa, and he said, in China there's 1.3 billion people, and in Africa there's 1 billion people in 64 different jurisdictions. So if we look at it from a purely viability standpoint, I mean, imagine what China would be like, as Mo Ibrahim posed yesterday, if it was 64 little different states. So what is your opinion about that?
Well, thank you. Well, you know, in these things, there are preconditions or prerequisites, co-requisites, and maybe even post facto conditions to let whatever has been done to keep on going. So what will be necessary is a very good idea, this level of integration, but it needs as a precondition, you know, macroeconomic convergence. So there has to be economic policy convergence in the macroeconomic area, harmonization of policies, and harmonization of the laws, legislation, to pave the way for a single currency. But most important also, it's some people say now they don't want to say political will anymore because this will is used in all sorts of forms. They talk of political commitment. So also that element of political commitment is necessary to achieve this. It will be of utmost importance to have you know, because monetary union is a signal of a very advanced stage of integration. And what we have seen in Europe happen will also happen in Africa, that strength in numbers, a larger internal market, interactions and so on. And if you allow me, really, just very briefly to address the earlier question, that of you know, President Donald Kaberuka of African Development Bank, that he himself has a very good idea of Africa 50, where funds could be raised in the international markets, leveraging all sorts of African assets that are there. And this idea has really caught on with the stakeholders. But also because you need large capital over a long period at reasonable cost. So even those private-public partnerships come again into play, and the consortia and guarantee schemes. I would like to give credit on the question of the crisis. We must give due credit to our authorities in Africa. It was not just because they were less linked to the international financial system. It is also proper macroeconomic and financial management. The government, the authorities, and the central banks play their role very well. IMF and the World Bank have admitted this, and it is true. So we have to give credit to our authorities for proper management. For the future, diversifying the economy, going for value chains, value addition, and promoting intra-Africa trade as infrastructure improves in its broad context, it will make the economy more resilient. African economy is much more resilient. And I think that integration also, strides on the integration front will also be most helpful. Thank you very much.
Thank you. I think we have a little bit of a crisis with time, and I'll just take one question from the gentleman over there and the second one from over here. Just two very brief questions before we ask the panels to summarize with one recommendation that they'd like carried forward on the conversation of sustainability and inclusivity in banking. So just one or two very quick questions.
Thank you very much. My name is Amwesi Jaron from Uganda, and my work is actually creating investor confidence in that country. Now, I was so surprised when the moderator asked the question, because there is actually a mismatch between the commercial rate lending and clients' investment interests, and the CEO for the Standard Chartered, my brother Soka, he said that for those clients who know how to negotiate well, the rates can be lowered. How about those clients who don't know how to negotiate? Because I don't think that negotiation should be taken for granted, because I think if we have to address the question of inclusive growth, the banks have to put in place the incentives for the clients that cut across. Because if someone comes from a rural area and he doesn't even know finances and he wants money, he wants to do investment, and then even the negotiation actually, there may be certain strings attached to negotiations. So I think we need to put standards that cut across, where the clients can be able to get the best rates.
I think I'll need to ask you to limit the question.
Yeah.
Okay, maybe we'll take one more question, and then maybe two more questions. And what I propose that we do is that you direct your question. You've directed that to Mr. Soka. If you could direct your question, make it brief so that we can go into the summary.
Thank you very much, Moderator. My name is Sylvester Kasuku. I'm the Director General and Chief Executive Officer of the LAPSET Corridor Development Authority in Kenya. This is the authority that is spearheading the implementation of the 7 key infrastructural projects covering Kenya, Uganda, Ethiopia, and South Sudan. The question is, we do understand that we do need a lot of input from finances to be able to deliver infrastructure in Africa. At the same time, we also understand that there is a constraint in raising these finances. A lot of times, countries are grappling on their own to get a hold of these finances, but they are not able to. They've been the paradigm shift that if you front for regional projects from the same financiers, you are most likely to get greater leverage. My question is, noting that the African continent is the next global growth frontier, is there a possibility of changing the game with regard to financing of infrastructure in Africa, in which financing institutions are able perhaps to create a better framework for lending, so as to also lower the maturity periods within which projects are able to access financing. Currently, you are aware that some projects do take as long as 10 years. I've seen a number of projects in our country, particularly the ones which are currently under construction, have taken about 10 years to reach where they are.
Okay.
Within that time...
I need you to shorten your question.
Yes. I'm just trying to make them much more armed so that they give us a good answer. What I'm asking is that, is there a possibility for financing institutions within the African continent creating a framework, perhaps for better lending, for faster lending, for greater guaranteeing, so as to reduce the exposure that most countries are facing today?
Who would you like to address the question to?
I think the Standard team,
okay.
as well as...
To be gender sensitive, I'll take the last question from the lady over here, and we shall go into responses. If you don't mind, I mean, we are completely out of time.
Thank you. My name is Chantal Kamatari. I work in a European financial institution, and I'm a member of diaspora, many diaspora network in Belgium. My question is about what you do for the diaspora remittances to be not expensive as they are today, and to channel them toward investment. You said you need capital for Basel III, so maybe you have cheap capital within diaspora funds remittances, and also all the, I think we have also a big part of how can I say, money which is here but which is not remittances within diaspora accounts, which can be used for that. I think Rwanda tried to have Eurobonds, and I think they mobilized diaspora money. What other countries are trying to do for that? Thank you.
Thank you. Okay, we'll just take one second question from you.
Merci beaucoup. Donc, je m'appelle... do you want me to talk in English? Okay, my name is Jamal Grib, Head of Division Private Sector Investment and the Resource Mobilization of the African Union Commission. As a former head of Department of the Credit in the Kuwaiti Bank, I would like just to make one or two just very small comments. So, first of all, regarding the Islamic finance, I think it's very important perhaps to talk a little bit about it. What do you think in terms of funding the Islamic? Do you think that still work for the public funding to fund the infrastructure project? For me, it's not possible, but perhaps you can tell me. And the second issue is regarding the guarantee fund. As you mentioned it before, it's very important, so the guarantee. But we see that the guaranteeing a fund or a credit is we have a premium to be paid, and which, of course, escalate even the interest of the credit itself. So the issue is, do you think that we can think having a guarantee fund where the shareholders are the banks themselves, and those banks will finally give the credit with a less, the premium on the credit itself will be deducted from the interest, which will make finally the same interest, the banking interest. So this is really the two issues.
Yeah, thank you very much. I think what we shall do now, in the interest of time, is that I'll ask each of the panelists to respond very briefly. I'll give you 1 minute each, because there's 5 of you. I think we have only 2 minutes, but we'll probably stretch that to 5. And if you could respond to any of the questions been asked to you, as well as to summarize, if there was one recommendation from this conversation today, what would that be? And I'll start with you, Fernando. Well, 1 minute, please.
On the questions, just a few notes on the lending rates. If you have 15% inflation for a year, you cannot talk about low interest rates. And that's a point. And I think that macroeconomic policies must be over there in place. And a lot of African countries have done very well at this point. My major recommendation for banks on this theme is that we all should continue to work very closely to the governments in removing the impediments for lending more to SMEs. For instance, let me talk about what the Angolan government has done with interest bonification and a credit guarantee fund funded by the government that is working very well with the banks at this time.
Thank you very much. Jai?
Pour la finance islamique, c'est vrai que c'est un domaine qui n'a pas été encore suffisamment exploré donc, sur notre continent. Et il y a, à notre sens, de réelles opportunités, pour peu que la régulation et que les autorités mettent en place un certain nombre de mécanismes pour que le coût ne soit pas prohibitif. Parce que la problématique, justement, de la finance islamique, c'est le coût. Et lorsqu'on arrive sur des projets d'infrastructure, sur des projets à long terme, donc cela peut être effectivement rédhibitoire et ne pas permettre donc de les développer. Et nous avons quelques expériences donc, au Maroc, au Sénégal, qui fonctionnent relativement bien, mais qui demandent donc un cadre législatif et un cadre, je dirais, réglementaire qui soit plus encourageant et plus motivant pour les banquiers. Mais c'est quelque chose qui aura certainement de belles opportunités à l'avenir.
Thank you very much, Mr. Soka.
Thank you very much. My good old brother from Uganda was Suso Uchando. I worked in Uganda before, so I understand that space fairly well. The issue that you raised is very important. Now, the response was under my cluster 3 when I initially made my comments on having unorthodox partnerships. And one of the solutions there is, in the interest of time, I didn't go into the details, is financial literacy. It is a given. And you would know from my days, and we continue to do so in Uganda and all other African markets today, we engage, and proactively so, with all stakeholders and provide advice, lectures, chambers of commerce, etc., for financial literacy to be improved. So that is a solution, and it is working. There are many others, but I don't think I need to go into all those details. The gentleman who talked about what we can do to ensure financing is available, I think it's very clear. The coalitions, again, will make a difference. That is a given. And we'll work in partnerships with yourselves and other stakeholders to ensure that we have a viable environment in which we can trade. My one recommendation is back to regulations. I think it's a broken record that I would play it over and over again. Oh, sorry, diaspora funding and diaspora engagement, it is a must. Ghana and many other countries have played a big role, and they have played an important role here. And if you go to many African countries today, including Cote d'Ivoire now, that's really enjoying diaspora, having an advantage, having diaspora receipts going back to the country, you would see the positives of a post-conflict nation getting the benefit of diaspora liabilities going back to the markets. So that is taking place. My one big recommendation is regulations. I think, back to the heads of states, they need to ensure that regulations, again, and most regulators must ensure that there is a trade-off and a right trade-offs between financial stability and financial access. These are mutually and must be mutually enforceable.
Yeah, thank you very much. And difficult as it may be, Commissioner Maruping, can we get the benefits of your experience and wisdom in only 1 minute?
I don't know about wisdom, but I would really recommend that the banks, I recommend to the banks now to be selective and to be also, have special windows, specialized windows for small and medium enterprises, because they are employment elastic. For every dollar you invest in SMEs, the more employment you get. Therefore, you tackle poverty and attend to inequalities. Inclusive business. Inclusive business is the kind of business that involves people at the bottom of the social pile. We call it BOP, which is BOP different from central banking. It's not balance of payments, but at the bottom of the pyramid. You involve them in value chains, either at raw material stage or production stage or distribution, or in all these stages of value addition. Some firms are doing that. I know that in Ethiopia, Heineken is doing that, getting barley from peasants, helping those peasants to produce better, and they have an assured market, as an example, but there are many others. Also to favor projects with more linkages on various, forward, backward, vertical, all angles. More linkages, the better. This is not a dream. We had this concept in the integrated, framework, enhanced integrated framework in Geneva, a small fund for LDCs, where we chose to make funds available to those big small business projects with more linkages, to make sure that once you finance them, then the whole thing just spreads. But also really those with high level of social responsibility, firms with high level of social responsibility. Mr. Moderator, let me just also mention that really women should also be favored. The World Bank recently made a study that showed that for every dollar you invest in women, the rate of return is much, much higher, and it will lead to that inclusive business.
Very well, very, very well put. I think
also youth. I'm concluding now. Youth, really, because youth have new ideas. they are energetic and they are very courageous, and it's a good investment to support them, even with business support services.
Thank you very, very much, Commissioner Maruping. And I think in conclusion, I'll just summarize this session by saying that, the 4 major recommendations that come out of this session is the need for governments to work closer and to get the policymakers and the banking system to work and collaborate to ensure that there's greater access to SMEs. And I'm sure my friends from For Africa, the Microsoft Initiative, are really happy to hear about the last comments by Commissioner Maruping. I think the second key thrust of today's conversation is the need for greater financial literacy, financial regulation to ensure that there's a more stable regulatory environment for the financial systems to work in greater concert. And the very final comment is the need for inclusivity and to work with groupings that encourage greater linkages. And to wear my hat as a business person, I hope that sitting with all these bankers, the day I knock on your door for funding, you will not deny me the funds. And to say also that you've been a great audience and you've been a great panel, and thank you very much to the organizers for putting this great session together. Thank you very much.
Thank you, Kiprona. Thank you to our distinguished speakers. I think we've really been spoiled for choice in the variety of perspectives that we brought, and thank you, Kiprona, for bringing that out. We're going to go onto lunchtime now. I guess you guys are starving. Thank you for staying in the room right through to the session. Please remember, we will start on time the 5 parallel sessions, the 3 roundtables, the Africa-EU investor meeting, and the success stories which will take place here. Thank you.